Good morning, everybody. It's 10 o'clock. It's time to start our Zoomcast series, or our fall Zoomcast series, shall I say. So I want to thank everybody that's on the call right now, and I think more and more people are going to be joining us. If you've got your camera available, please put it on. We'd love to see your lovely smiling face, like Stephen's smiling face. There's Stephen. There he is. Carrie Lane is with us today. Carrie's from the Benefits Trust. Rob Crowder, my son, is with us today. He's going to be doing some of the presenting today as well. So thank you, Rob, for joining us. On behalf of all of us here at the Benefits Trust, we want to thank you for joining us. Mike Ignatz, unfortunately, is not with us today. He's tied up with another thing. So Carrie and Rob are going to be monitoring your questions as well. If you have any questions that come up, either just put your hand up, shout out, say, hey, Rob, you're crazy, you're nuts, and interrupt me, or put it in the chat box for everybody to see, whatever works. But we want to create interaction. When we started setting up these Zoomcasts, it was the idea of this Zoomcast series was really, it's about not being the smartest person in the room. It's about being in a room where everybody gets smarter. It's as simple as that. It's about being in a room where everybody gets smarter. And whenever I attend sessions like this, I always look for one good idea. You know, if I get one good idea, it's been time well spent. So let's hope that we help you, with one good idea, maybe a few more than that, and we'll help you with your, hopefully we can help you sell additional benefits. And that's what it's really all about. So today we're going to talk about a number of things, but what was that? Someone saying something, or maybe they're not muted, I don't know. But anyways, a couple of quick housekeeping ideas or items that we want to get out of the way. Please put your camera on if you can. We really, really appreciate that. It's better to talk to people, live people, as opposed to, not talking to a blank screen. So thank you very much for those that have their camera on and are putting their camera on. We really appreciate it. At the end of the session today, you're going to get a really short survey, 4 or 5 questions. Please fill it out, send it back to us. We want to know how we did today and how we can do it better tomorrow, as simple as that. And as well as that, Mike Ignatz is going to be sending you some CE credits or a CE credit, more importantly, for participating today. So we thank you for that as well. I'm going to share my screen. And there we go. Let me just share my screen. Today, we want to talk about Know Your Corporate Client, and we want to talk about profitable clients in the building, trades, and construction industry in Toronto. And this is something unique. This is something that we've built and created because of what we have found to be a pretty large gap, an opportunity, as I'd like to say. It's a pretty significant gap, I find, in the building trades and construction industry in Ontario. Things are changing drastically in this particular industry. It's one of the largest growing industries in Ontario, if not number one. I think it is number 2, but I really think it's the largest growing industry in Ontario right now. Our agenda today, and this is right out of the FISRA website, as eligible CE credits, we want to talk about client needs analysis. We want to talk about understanding risks and how to manage them. We want to talk about reporting and accounting considerations. We want to talk about tax considerations as well. And then, of course, question and answer and discussion. And of course, that can happen anywhere throughout the presentation. So your CE credit certificate will include this agenda as well of what we talked about today. So if there's ever any issues, just let us know, but there shouldn't be. Point of view. Well, I was saying this is the largest growing industry in Ontario right now. There are 10,000 businesses in the building trades and construction industry with less than 100 full-time employees. We're not talking about, Acon or Ellis Don. We're talking about the guys that came, or the people, pardon me, that came and did renovations at our place up here in Huntsville. We're talking about the people that are doing, building in your communities and renovations and so on in your communities and trades in your communities. There are 10,000 plus businesses. Right now in the building and construction industry, there are 25,000 open jobs today. There are 25,000 open jobs. This is going to grow to 50,000 by 2027. 2027 is not that long away, not that far away, I should say. 20,000. Oh, there's a missing 0 there, Carrie. We got to make a point of that. 20,000 skilled workers are going to retire by 2027. A lot of people are going to be exiting the business because of retirement. It's as simple as that. We're seeing that in all industries. In every industry that you're in, there's a lot of people retiring because they're getting to that age. But it's amazing. 20,000 skilled workers are going to be leaving by 2027. So you got 50,000 job openings, 20,000 people leaving. It's amazing. There's such a gap there for skilled people. 1.5 million housing starts in the GTA by 2027. 1.5 million. There's a huge demand for housing. They're going to be building 1.5 million doors, as I like to say, in the GTA. And we're talking about Peel, York, Durham, etc., as well as, Toronto. They're going to be building 1.5 million new doors by 2027. And to top it all off, to create that perfect storm, this is an underserved market by the insurance company solutions. It's an underserved market. The insurance companies do not like this risk, and we found it to be an underserved and cumbersome by the insurance companies. So as I like to say, quite frankly, there's endless prospects. There are endless prospects. They need your help. Simple as that. You are the professional advisor. You are the leader. They need your help. People in this industry need your help. They are super busy people, incredibly busy people. They don't have time for a lot of back and forth and toing and froing and answering endless emails. They want to make decisions. They want to make decisions quickly, and they want to get things in place. They are competing. They are competing against union jobs. The big Ellis Dons of the world and Acons of the world and some of these towers in downtown Toronto and so on. They're all union jobs. They're $65 an hour plus benefits. And they're competing for staff against these type of people. So it's a perfect storm. It's a ripe opportunity to look at employee benefits in this particular marketplace. Other consideration, benefit purchasing decisions are made differently in this space. We've tested this particular product out with a number of different advisors and a number of different end users, and their benefit purchasing decisions are made very differently. As I mentioned, they're made very quickly. And the question is, how do you provide value-added service at a profit? And this is what we're going to do today, is we're going to explore this through this lens. But one of the things that we have found in this particular industry, more than any other industry, in our test marketing of this product, or this solution more specifically, is you get to yes really quickly. You get to yes super quickly. All of the, I would say, out of all of the cases that we've sold, and I don't know the exact number of cases that we sold because we just really launched this product, the majority of them have been one meeting sales. So you think about that, you think about, selling employee benefits, and you're going back and forth and back and forth and back and forth. The majority of these sales have been one meeting sales. And we've done this because it's super easy. So a little bit of a disclaimer. The Benefits Trust started on January 1st, 1994. So we've been around for some time. Our target market is working with advisors like you, and really with employers with less than 100 employees. And the reason why we chose that is, well, there's a number of reasons why we've chosen that sort of target market size, quite simply because that's where all the business is. Willie Sutton robbed banks in the 1930s. He was a professional bank robber. He did a really good job at robbing banks, and he robbed 60 some odd banks. And he had two skills: robbing banks, number one, and the second skill was breaking out of prisons. And one time he was in front of a judge, and the judge said, Willie, why do you rob banks? And he goes, because that's where the money is. Well, you know what? The target market list, less than 100 employees. There's 440,000 businesses in Ontario right now. Simon, I'm not sure how many are in BC, but there's quite a few as well with less than 100 employees. That's where the money is. These are our views and our opinions. Let's be perfectly clear. These are our views and our opinions. And this is based on my experience with, 10,000. I'm the old guy. I seem like the old guy in the room right now. I've, had 10,000 sales meetings under my belt. So, it's coming from some point of experience without a doubt. This is not a commercial for the Benefits Trust. This is not a commercial for the Benefits Trust. We're going to overview a solution that we've created, but please, this is about your knowledge and increasing your knowledge and increasing ideas that you can use in your practice. And this presentation is focused primarily on the builder trades, and construction industry, but it can be used in any industry. But it's really just focused on these folks, and our comments and views are based on these folks because of the gap that we found. But you can use this just about anywhere. So, excuse me, let's jump right into this. Client needs analysis. This is important. And the question is, why is this important? Well, I think it's important on a couple of fronts. Number one, you got to know where your client is going to help them determine if or how you can help them, as simple as that. But it's there to protect you. I think client needs analysis is there really to protect you and your time. You know, sales interviews and prospecting calls, however, whatever you label them, they're two-way interviews. You know, they're two-way interviews. It's like dating. Simple as that. It's like dating, it's a two-way interview. And you've got to know where your client is going to determine whether or not you want to help them or you can help them. And if you don't like where they're going, there's no point of engaging with them and moving on. It's about, actually, it's not engaging with them and moving on, right? As simple as that. But it's determining where they are going to see where you can help them. And, in my notes here, preparing for the session today, it was interesting because I was thinking about it and I go, you know what, there are some people, and we all know these people, there are some people in our lives, and some clients and some prospects that are going to spend a lot of time. They spend a lot of time to save money. They spend a lot of time to save money. I know friends of ours that are like this, and they spend just an incredible amount of time to save money. And then there's the opposite. There's a lot of people and a lot of clients that will spend a lot of money to save time, and those are the folks that we really want to work with, is the people that are interested in their construction and trades and building industry, specifically today, and they're willing to spend money to save time because they want to get things done and they want to keep moving forward, as opposed to spending a whole bunch of time to save some money. So client needs analysis are important to protect you, to know where your client is going, and to know how to best serve them, without a doubt. So the question is, how do you know where your client is going? Well, simple question you got to ask, right? It's as simple as that. It's not rocket science. It's as simple as that. I've been a disciple, if you would, of the strategic coach. I have been for 30 odd years. It's a coaching service that I use. It's headed up by a gentleman by the name of Dan Sullivan. And if you're not a part of a coaching service, I would suggest that you look into one, because it's been invaluable for myself personally in our practice and our business, and it's helped us grow over the years. But he was in one of the sessions probably about 10-12 years ago. This question came up, and it's very simple. And I use this question everywhere. I use this question with prospects when I'm out with advisors like yourself. I use this question when I'm with my family. I use this question when I'm with my friends. I use this question when I'm with my son's friends. It's just a great conversation starter to find out where people are going. But if we were meeting here 3 years from now, and you were looking back over those 3 years, what has to have happened to say those are the best 3 years of your life? It's a simple question. You're putting someone out in the future. You're having them turn around and look back and say, what's happened over that 3 years for it to be the best 3 years of your life? And it's amazing the answers, and it's amazing the discussions that you can have around this very simple question. Have it so it rolls off your tongue, or a question very similar to this, so it just rolls off your tongue. But it's amazing what'll happen. But the fact of the matter is, when you're talking to a prospect, and you ask them this type of question, or you're asking this to a client and you ask them this type of question, right? They're going to give you a roadmap of where they're going or where they want to go. It's going to be clear. It's going to be concise. It's going to be very specific. You're going to see where they are going to grow and what markets they're going to grow in. They're going to tell you if they're going to sell. They're going to tell you if they're going to merge with other providers. They're going to tell you if they're going to be retiring. They're going to tell you if they're going to enter into new markets. They're going to tell you all sorts of things, but that's going to give you the roadmap to be able to assist them to get there, right? It's not about necessarily selling benefits. It's about working with clients to assist them to reach their goals. And this question is going to help you clearly define that roadmap, as simple as that. So other great questions to ask after that question. So you've got an understanding of where they're going. The next great questions to ask are, what are your biggest fears? What strengths do you want to capitalize on? And what's giving you confidence looking into the future? And it's interesting in this particular marketplace, I would say pardon me, I'm just trying to get comfortable here. 9 out of 10 of the folks working in the construction trades and building industries, 9 out of 10 of those folks, what are their biggest fears? And their biggest fears are projects on time, completing projects on time. It's interesting, one of the case studies that one of the contractors that we used to help develop this product, we spent a lot of time speaking with them about this particular product when it was into this development stage. Their biggest fear, without a doubt, is finishing projects on time. They are booked into to the end of 2024 right now. They're sold out until the end of 2024. They're looking and quoting on projects for 2025. So their biggest fear is being able to complete a project on time to meet client demands. That's their biggest fear. What strengths do they want to capitalize on? Well, they all say, we've got quality workmanship in our particular projects, whether it's renovating a bathroom or it's building a new house or anything in between. It's the quality of workmanship, and what's giving them confidence looking into the future is their reputation, providing they can develop those products, deliver those products on time. So the client needs analysis, I think, is critical in all industries, but it's certainly critical in the building trades and construction industry as well, because it's a future-based conversation that's going to give you a clear picture of where the client is going and how you can help them. And it's interesting because over the years since I've started asking this question, sometimes clients don't want to engage with you. As simple as that. They just say, you know what, I don't want to get involved in a big discussion here. I just want a benefit plan and put it in place, or take a look at my existing benefit plan, see if you can do it cheaper. And my attitude is, if they don't want to engage with you, the answer is next. It's just like a Tinder date. Right? Swipe right, next. They don't want to engage with you, right? And if you don't like where they're going, right? If you don't like where they're going, you choose to deal with them. Again, interviews are two ways. There's 10,000 plus businesses in this particular industry, right? Simple as that. If you don't like where they're going, or they're not willing to engage with you, I don't think there's any reason why you need to do business with them. Simple as that. So, on to the next point, understanding your target market and how to manage them. A benefit plan is a promise between an employer and a group of employees. So understanding risks, we're looking at that is the benefit plan is that promise between the employer, the plan sponsor, and that group of employees. So the question is, what do you want to promise them? And, low frequency, high cost promise, and high frequency, low cost promise. We'll come back to that in a moment. But I've used the word promise there 4 times in these 4 points. Promise, it's a very powerful word. I don't know, it's a word that I consider to be a very powerful word. I take very seriously. If I promise somebody something, I'm giving them my word that this is going to happen, right? A promise is a very powerful word. This came up, and I don't know where it came up, but I was in a meeting in probably, I don't know, 10 years ago, a while ago. And I was with this advisor, and we were sitting there talking to this particular prospective client about their benefit plan, and the meeting was not going well. The owner of the company was sitting back, and he was leaning back in his chair, and his arms crossed, and you could see the frustration on his face. And I stop, everybody, hold on a second. Let's just stop for a moment. And I said to the prospect, I said, sir, what are we talking about here today? And he goes, we're talking about employee benefits, there's group life stuff and drug coverage and stuff like that. And I said, no, we're talking about a promise between you and your employees. And all of a sudden, the light bulb went off in his head. His body language changed. He's an entrepreneur that's in charge of running his business. He owns his business. And all of a sudden, that word promise, the light went off in his head. And he goes, wow, I figured it out. I can promise anything I want. So it was a real eye-opening moment for me. Again, I have no idea where it came from, but I've been using that word ever since. I often think our role as a professional advisor is one of being a translator. We have to translate, insurance company jargon into English so the client can understand that. That's our role as an advisor, or part of our role as an advisor. It's using language that the client understands, and simple language like promise. Then we talk about, hey, there's 2 types of promises that you can make. One is a low frequency, high cost promise. So an example of that is, a low frequency promise, the chance of someone dying while you're an employee at your organization is pretty small. but the promise that you're making them is quite large. $25,000, $50,000, $100,000, whatever it is, but it's a very low frequency, high cost promise. And the opposite is true as well. You can make promises that are very high in frequency and very low cost. So for example, I'm going to take the generic equivalent of Lipitor tonight. And, that's pennies. And that is the, high frequency, low cost promise. If my employer says to me, we're going to cover you for your drugs. So when we look at the low frequency, high cost promise, these types of promises require insurance. And it's also, the options are somewhat limited due to the size of the particular client, but it's group life, group AD&D, long-term disability, critical illness, out-of-country emergency travel coverage, in Canada, stop loss. Those are types of things that again, you need insurance because it's that high cost promise that happens very infrequently. And the big thing here is long-term disability. The insurance companies do not like this space. Insurance companies do not like the building trades and construction industry, especially if they've got 5 or 6 or 10 employees, because you know what? They don't like the risk. Even though you might only have 10 employees, occasionally the owner puts his tool belt on, right? Or her tool belt on. And occasionally they're going up and down ladders and they're on job sites frequently. They're managing their projects. So long-term disability is a space that insurance companies really do not like at all. So again, understanding risks and how to manage them continued. It's about the high frequency, low cost promise, and this requires budgeting. We do offer this in an insured product, but it's really just about budgeting and budgeting effectively for extended health care, for drug care, for vision care, dental care, all the things that you know about. But again, it's about using that language and understanding risks and how to manage them. It's using that language in very simple terms to communicate effectively with your clients and prospects. So when we talk about understanding risks and how to manage them, what's available in the marketplace? Well, insurance companies do have solutions without a doubt, but they don't like the risks. They don't like this risk. So as a result of that, when they put these solutions in place, often, not always, but often, there are very large expense factors built into it. They're not prepared to offer significant amounts of insurance to protect against catastrophic, sudden, unexpected events. And they often rate these cases accordingly, or won't take them on accordingly. The other options, there are a number of third-party administrator solutions, of which we are one. But there are a number of different solutions that are out there. But the key thing is they generally speaking all have unique spins, and it's about understanding what those unique spins are, choosing one of them, linking yourself to that, and moving forward because of the way that these purchasing decisions are made in this particular industry. So the question that I like to ask is, how do you serve this marketplace profitably? And I think the answer that is crystal clear from both sides is you got to minimize the amount of time that you spend on the solution, and you've got to lead the client into that solution, because remember, you are the expert and they're looking to you for advice. They're the expert at their building. They're the expert at their trade. They're the expert in the construction industry. You are the expert in employee benefits. You've searched the marketplace, you've found a solution, and you've got to lead them in that direction. If that solution is one that we offer, fantastic. If it's one that someone else offers, fantastic. But it's about you doing this profitably, and this is how you serve this marketplace effectively well. So understanding risks, builders, it's interesting. Builders, people in trades, people in the construction industry, they're all interesting people. And one of the things that I've learned after talking to a number of these particular clients in the space is they know what their costs are. Oh my gosh, do they know what their costs are? They know what a 4x8 sheet of plywood is today. They know how much that costs today. They're looking at building, an extension on a place. They're looking at building a new house. They know what a 4x8 sheet of plywood costs today. They know what a 2x4 costs today. And they know the cost per hour of everybody that's on that job site. They know the cost per hour. They know everything. It's amazing how much of a finger they have on their pulse, right? They know exactly what's going on. So one of the things that we've done is we've created the Builder's Benefit Plan. And the builder's benefit plan is something that is designed specifically for this industry. It's easy for clients in this particular space to understand because it answers a lot of these questions in advance. It gives you the opportunity to get to yes or no very quickly, which increases your profitability. The best part about this is the client sets their own budget. There's no guessing, there's no game playing, there's no back and forth, there's no toing and froing, right? The client sets their own budget. So anyways, what I want to do right now is turn this over to Rob. Rob is going to take us through what we've done in this particular space. He's going to overview it. I'm going to do some color commentary, which means I'm going to interrupt him from time to time because that's what I do.
No,
so
not
Rob,
you.
Yeah, over to you.
Wonderful. Thanks, Rob. So I'm just going to go over the Builder's Benefit Plan website. We have a dedicated website that acts as a great landing page to kind of summarize all the components of the plan. It has all of the application docs on the website available for download and the marketing PDF that I'm going to dive a bit deeper into. But first, right on the homepage, we've actually broken it down and priced components of the plan out per hour. We are going to bill everything on a monthly basis, but we do have it here for a conceptual purpose, and I'll get into that a bit more when I get into the meat of the PDF. But first things first, the only mandatory part of the plan is a $650 a week accident income replacement indemnity and $100,000 of AD&D. And our philosophy behind that was, as Rob was saying, the builders, their biggest fear is not finishing the job on time and retaining staff so they can finish jobs on time. A lot of employees in this industry, they're very busy people. They're on their feet a lot, and they lead busy lives on and off the job site. A lot of the time doing our market research, we found that they go ATVing on the weekends, they'll be hiking, or a lot of the time they'll actually put their tool belt on and they'll actually help their friends build their boathouse or a shed. If they're a framer and their friend's a plumber, they'll go help them out and they'll kind of trade back and forth. So in a lot of cases, they're actually on the job site on the weekend, but it's not actual works. They're not covered by WSIB. So they're really worried about them getting hurt. So the $650 a week accident income replacement has a 0-day waiting period, and it's good for 1 year, for 52 weeks. And then we also put this $100,000 of AD&D on. Maybe Rob, I'll let you talk about your story on why you wanted to put this on.
Yeah, so again, in the market research, it's one of those things that the builders themselves, they're saying if someone gets hurt on our website, our job site, or more importantly, someone gets killed on our job site, we want to be able to deliver a meaningful check. It's as simple as that. We want to be able to deliver a meaningful check. Excuse me. And it really scared me when they were doing some work on our particular extension on our house. These guys were walking on
very, very skinny scaffolding.
Very skinny scaffolding and putting in 500-pound windows. And I had to leave because I was so scared. I didn't want someone to die, but because they could have very easily died. So it was about having meaningful insurance amounts to be able to deliver, God forbid something happens.
Great. So these are the only mandatory parts of the plan. So I'll scroll through a bit more. I'm going to go through this pretty quickly, but you're more than welcome to check it out after. As low as 20 cents an hour. Plan advantages, we pick up the phone. So it's powered by the Benefits Trust. There's no medical questionnaire required to join. Easy to submit claims, convenience of a prescription drug card. Participation guidelines, we need a minimum of 3 people to join the plan. I'll go over this a bit more in detail when I pull up the PDF. We have a quick FAQ section, and then you can click right here to download the overview and enrollment forms and the premium calculation worksheet. So everything's right on the website, nice and easy. So now we have our marketing PDF, very similar to the website, hits home the main points, the mandatory coverage, talks about the solution, 20 cents an hour. And then
it's built, Rob, if I can interrupt, it's built on a monthly basis in a traditional sort of format. The 20 cents an hour and the cost per hour is really to get their attention and get them to yes very quickly.
So it's based on an estimate of 2,000 paid hours. So the essential benefits come in at $33 a month, and again, it includes accident income replacement insurance and then the AD&D coverage to kind of hit home those main fears that a lot of the business owners have in this industry. And then we have the option to add on extended healthcare with a prescription drug card, 80% a copay, $5 dispensing fee max, mandatory generic substitution, very standard in the industry prescription drug care. It also has semi-private hospital room care up to $150 per day, maximum 30 days per year. Out-of-country emergency medical coverage, 60 days per trip, up to a max of $5 million per claim, insured by Green Shield. Great as the world opens up again, and great as when these guys get into kind of dead season. Lots of them go traveling again. The world's opened up, so it's a great insurance product to have on. Then we have the ability or the option to add dental care. 80% basic dental, so basic and endoperio, service part A and B, covers majority of the dental cleanings and routine stuff that you'll have done. 6-month recall, $750 per person to a max of $2,000 per family. And then we have the option to add on critical illness, life insurance, virtual health, and an EAP program. And then the best part about this, or one of the best parts, is the ability to add a healthcare spending account. So our kind of philosophy behind this is majority of people will use prescription drug coverage. It's a pretty valuable benefit that a lot of benefit plans have that employees and employers find great. Then we have dental care. Most people are going to go to the dentist once or twice a year. It's a pretty valuable benefit that most people like to see on the benefit plan. And then we have the ability to add on a healthcare spending account for any of the other needs that employees might have. So vision or any other CRA approved medical expense. And then critical illness, life insurance, and EAP, as I mentioned. Go a bit farther down the PDF, and we have different examples of different coverage options that you can go through. So you could just put on the essential benefits for your crew, have them covered with the accident income replacement and the AD&D, or you could just add on the essential coverage plus the prescription drugs, and then or the essential coverage, extended healthcare, and the dental care. So it's pretty interesting. When we first launched this, we sent it out to a few advisors, and one advisor brought this out to a job site with a prospect, went over all this in pretty great detail, talked about the essential benefits, talked about the optional, gave a pretty high level explanation, just like I just did, and then showed the business owner the 3 plan ideas. Business owner looked at it pretty quickly and went, yeah, I like the best plan for all 12 of my employees, and then I'd like to add a healthcare spending account on for my brother and I, the 2 business owners. So it was very quick and easy for them to understand, got to yes or no very fast. And then we've also built a premium calculation worksheet that makes it really easy to quote on the spot. So we'll go over really quick a sample group. They're going to have 12 employees total. Put in right there, gives you the monthly premium. We're going to say 10 of them, or let's say 2 of them are single, 10 family. And then let's just say for this example, the business owner already has this kind of coverage in place because maybe the advisor, you guys have sold them some other great individual policies, but they want to put it on for all of their employees. So we'll do 10 here, 10 here, and then we'll say they want the virtual health and EAP for all 12, the business owners as well. And then we're going to say that the business owner, there's 2 owners in this. We're going to say that they want a $3,000 healthcare spending account for both owners on the plan. And then a $500 healthcare spending account for the other 10. So really quick on the spot, you can go through and quote nice and fast. But then let's just say a light bulb goes off and the business owner goes, I've got actually 2 other key employees, and I want to compensate them a bit differently because they've been with me for a while. They're an integral part of the organization. They're a bit different than someone who's just been hired a few weeks ago. So we're going to change that to 8, and they want to offer their key employees $1,000. So this just really gives the ability to get to yes or no very fast, quote on the spot. You can get very creative with the plan design, offer different amounts in the healthcare spending account. I've had a few advisors offer pretty big healthcare spending accounts for the business owner. So it gives them the best tax efficient solution so they can put all of their claims through the benefit plan. And then you can get creative with key employees and other employees to work on employee retention strategies.
So Rob, just before we continue, when Rob mentioned that we sent this out to a couple of advisors, the PDF worksheet, we sent it out to a couple of advisors. The one advisor took this particular worksheet to the job site, and the particular client in this case said, yes, we want the good benefit plan, and what does it cost? And he worked this out manually because he didn't have it live yet. He worked it out manually on the spot, and this was a one meeting sale on the job site, premium calculation done.
Mm-hmm.
No toing and froing, no let me get your employee data, none of that. The decision was made, and the meeting was 15 minutes long.
And then the advisor said to us too, when they first started the meeting, the end user client goes, I don't like talking about insurance. It's annoying. It's convoluted. It takes too much time. And then he said, no, listen, we've got a great plan here. Get to yes or no very quickly. Little disruption to the business because they're so busy. They're booking at 2025. They don't have time to go back and forth and look at a bunch of convoluted stuff. So we think it's a great product for that. I'll go back on the website and show you the application documents. Just 1 second here.
That's a nice picture, Rob. Where's that from?
It's Panorama Ridge in beautiful British Columbia. Yeah, so I mentioned we have everything available for download. I'm happy to send it to you after the call as well. I'm also happy to put your branding information on the PDF.
So go through the PDF a little bit more because there's more information on there, Rob.
Yeah. So it talks about the Builder's Benefit Plan. Plan Advantages, I mentioned, it's run by the Benefits Trust. We pick up the phone. We pay claims incredibly quick. Business owners won't have any, they can field all the questions about the plan to us so they could focus on their business. We need a minimum of 3 employees, including the business owner, to start up a plan. If you find a prospect with less than 3, we do have other options for that, so please reach out. Eligible employees need to work a minimum of 24 hours per week, but that can be averaged over the year. Standard waiting period that they can put on 3 months, and they can waive it if they choose to. Coverage ceases at age 70. We could add a healthcare spending account. Must be fully employer funded. And scroll a bit farther down. Plan provisions. Just goes a bit more into the prescription drug coverage. There's a standard pre-existing condition clause on the prescription drug coverage. Best way to explain it at a very high level is if the house is smoking, you can't buy fire insurance on the house. This talks a bit more about the critical illness benefit, talks about the insured conditions, and then talks a bit about the pre-X on the critical illness. So the PDF has everything that you will be asked as an advisor. All the answers are right on the PDF in a very central location. This talks about the healthcare spending account. As you know, 100% expenses are paid, or sorry, any CRA approved medical expense is payable at 100% through an HSA, providing there's a balance. It's a great tool for a business owner because it provides 100% cost certainty. You know, the rates in the healthcare spending account are never going to change unless you choose to put more money in the account. So it's great to kind of explain to a business owner, and it's amazing for employees because they get to choose how they spend the funds in the account. So we find employees get a lot of satisfaction out of a healthcare spending account.
The plan, Rob, I just want to point out the plan. We've got a number of insurance partners in place on this plan. We deal with Walvanesa for the accident and AD&D. We deal with Green Shield for the out-of-country emergency travel coverage. We've got Lloyd's of London for the stop loss insurance. A number of different partners that we use on this. The drug card is powered through Claim Secure, which is Canada Life, where we've got a long-standing relationship with them. So the idea of using a TPA is you've got experts in their particular spots, and we've packaged them together in such a fashion that it's accessible to these particular industries.
This talks a bit more about the benefits trust. We've been in the business for over 25 years, talks about our mobile claim app, talks about how it's very quick and simplistic. We don't make clients fill out a bunch of information to complete a claim. It's as simple as taking a picture, making sure the picture is clear, sending it right off, and then we pay it the next business day. Very simple and quick. This talks about how we do the 5% really well.
Okay, quick note on that. Hold on a second. We got time. Yeah, quick note on that. I deal with Rogers. Right, Rogers for my phone. I was away on vacation last week. I came back to, a pile of emails, and one of them was my Rogers bill. And I go online to download my Rogers bill to send it to our accounts payable department. And for 3 days, I couldn't do it. I couldn't do it. I couldn't do it. I couldn't do it. Sorry, the system's down. Sorry, the system's down. Sorry, the system's down. Right. And it was incredibly frustrating for me because I like to touch things once. Right. Finally, I just took a screenshot of the amount and had our accounts payable person pay it based on that. But I've got to remember, she's going to have to remind me to download the bill in a couple of weeks when the website's back up. It's incredibly frustrating. There's nobody to call for help with this. They can't send you the bill, via email. This is what we do. We do the 5% extremely well. 95% of the time, it works great. You take a picture, you send it in. There's no issues with the billing, whatever the circumstances are. But every once in a while, there's something that happens, right? We do that 5% extraordinarily well, as I like to say, extremely well.
Yeah, I agree. I'm sorry, go ahead.
Yeah, we do the 5% extremely well. We answer the phone, we get the problem solved. One of the biggest things that I found, which is really interesting, is if there's a problem with the drug card, it's usually a very simple fix because there's a problem with a date of birth. My youngest son was born on January 10th, 2001. So when you're entering that into a document, date of birth is 01/10/01, right? Those can get backwards and then everything's messed up. Sorry to interrupt, Rob.
No, perfect. No, you pretty much hit it home right there. And then, yeah, this is the point I was getting to. So I have my information pre-filled in here, but I'm more than happy to put any of your individual information in here, take out my stuff, put in your logo right here, put your branding on it. So if that's something you're interested in, please give me a call, send me an email. I'd be more than happy to do that for you. Wonderful. Anything else we want to go over with this, Rob?
No, this is perfect. Thank you very much. Appreciate it.
I'll go over here really quick here. So the apply section, so you can download the company application form, very similar to many applications out there. It's all a PDF, so you can fill it right out, or you can print it out and use ink, whatever you prefer. But again, any more questions about this, just give me a call. I'd be more than happy to go over this with you.
Awesome. Thanks, Rob. Let me go back to this document. So, hold a second, let me close this. So understanding risks and how to manage it, the builder's benefit plan, easy, get to yes or no quickly and profitably. The client sets their own budget. There's no guessing games, no game playing, no back and forth. Moving on to reporting and accounting consideration. The client sets their own budget. The healthcare spending accounts, create that annual budget certainty, like Rob was mentioning. And the annual renewal and budgeting, it's based on hourly costs and it's ease of budgeting. So it's very simple and it's very straightforward. Built into this is a 10% commission for you for all of your efforts, obviously. And there's a 5% commission based on the healthcare spending account. Tax considerations. All benefit plan costs are tax deductible business expenses. You know that. But this is important to understand. Extended healthcare benefits and dental care benefits are received tax-free. You know that as well. But business owners' expenses should be, covered at 100%. So, for example, the example that I like to use, I wear glasses. I wear glasses when I'm using my computer. So I went probably about a year ago and I got a new prescription for my eyes, specifically to look at screens because I spend too much time looking at screens. And the doctor gave me this new prescription. I went out from his office into the lobby, and one of his assistants helped me pick out a pair of glasses. So these are the glasses I picked out, and I said, fantastic. And then she said, those will be $600. And I said, great, I want 3 pair. And she looked at me like I had 2 heads. And I said, no, I want 3 pair of these things. She goes, that's going to be $1,800. I said, I don't care. I want 3 pair because I want to keep a pair on my desk at my office. I want to keep a pair at my desk at my home office, and I want to keep a pair in my briefcase because that way I never have to remember where they are. I always know where they are. So that $1,800 expense, I want to cover through my benefit plan because it's a tax deductible expense to my business and I receive the benefits tax free. So you always want to talk to the business owner in this fashion to make sure that they understand that you want to have 100% of these benefits covered through their, in this case, healthcare spending account. So they want to put enough money in there to manage their expenses and their family's expenses throughout the year. So it's a tax advantage way to pay for the things that they're going to buy anyway. Simple as that. And it just makes a great deal of sense. So it's important to, you talk about the simplicity of this plan, but it's important to focus on that point for the business owner to make sure that they have 100% unlimited plan. The other thing, the healthcare spending accounts are recommended, especially if the spouse has a plan. The spouse has a plan. This is even a stronger message, in my opinion, because you say, hey, great, the healthcare spending account is always the last payer. It's always the last payer. So using Rob's example and playing around with the data and playing around with the costing sheet, if the spouse has a great plan because they're ambulance drivers or their spouse is a teacher or whatever the circumstances are, it's great because you say the owner class, they're going to waive the health and dental. They're not going to have the health and dental benefit because they're going to use that person is going to use the spouse's plan, and then they're going to use a healthcare spending account for things that aren't included in the spouse's plan, like vision care, like I just mentioned, or additional vision care, or they're going to use it for orthodontia for the kids or whatever the circumstances are. But we want to focus on that 100% owner plan for two reasons. Number one, because it makes sense from a tax perspective, but number two, once they drink the Kool-Aid, they're not going anywhere. Simple as that.
If I could hop in for a quick sec, I was on a call with an advisor about a month ago going over this plan, and we were talking about the healthcare spending account. And at first, the business owner was forgetting that the whole invoice or monthly invoice was a tax deductible business expense. And then once we explained that again and said, listen, you won't have to pay out of pocket for your stuff. You could put it all in the healthcare spending account, and then it's run through the company. The light bulb went off, and he goes, oh, I actually want the healthcare spending account to be $4,000 and not $2,000, because the light bulb just went off. Because we understand this every day that it's a business expense and that, but once you really hit home that they don't have to use their personal funds and it can be all funded through the healthcare spending account, thus through the business, the light bulb went off, and it was great. Like it doubled the HSA.
So other tax considerations to on that note, continuing, benefits are part of compensation, right? So you look at it from a perspective of compensation, and be creative when when designing the benefit plan within the confines of what we're suggesting here. Be very creative, because ask those questions and understand where they're going, where your prospect is going, so you can be very creative. So, for example, does your spouse have a plan? Yes. As a matter of fact, he's a teacher or a principal at a high school or whatever. Great. So what we want to do is bump up your healthcare spending account and not have you part of the health and dental. It's all these types of things. And it's that instant ability to quote. You can, use your laptop on the back of someone's pickup truck and use your phone as a hotspot or however you do it. But you can do this in a matter of moments on a job site. And that's what it was designed to do. So we've got 10 minutes left. And really, in summary, what we want to talk about is it's important to understand where your client is going. You understand where the client is going. And the question to ask first, and the question to ask at every meeting is, if we were meeting here 3 years from today and you were looking back over those 3 years, what has to have happened for you to say it's been the best 3 years of your life? What do they want to promise and who do they want to promise it to? Using that example that Rob had, it was what, 10 employees or 12 people in their organization, whatever the number was. There was an owner group, and then there was an employee group, and then there was a site supervisor group, whatever the circumstances are. There's always groups within the group. So what do you want to promise to each of those particular groups? How do you want to compensate them? Because benefits are part of compensation. Right, the cost certainty and the monthly, the cost certainty creates that opportunity, so there aren't any surprises, and the 100% plans work really well for owners. It works extraordinarily well for owners. So let me stop there, and let me stop sharing this slide. Now, does anybody have any questions, thoughts, ideas, concerns? Or you just want to bug out 10 minutes early. It's up to you. Anybody have any questions about, again, it's about the room getting smarter, not the smartest person in the room speaking, but it's about the whole room getting smarter. I know there was a couple of questions throughout the chat, which I think were answered. But is any other questions, thoughts, ideas? Yep, Simon.
So at what point does this not make sense? I appreciate all the work that's been done in it, and I think that there's a great market for it and lots of need. At what point do the numbers not make sense, where they're better off putting another plan together through underwriting and a bigger plan for a bigger company? How many lives?
That's a great question, and it really depends on what is motivating the client. There isn't any clear, cutoff. Some people, it's kind of interesting because we're looking at it from two slightly different perspectives, but we've got a large client that's looking at it to just add the $100,000 AD&D and the $650 accident plan to their existing plan, right? So they're just looking to protect them from that perspective, and it's quite a few employees. Where other companies are saying, hey, this is just a lot more simple and a lot more straightforward. The answer is it really depends. It depends on where the client is going, and I wish I could answer that question, but it really depends on the market and the appetite. We've had another client come to us, and they say, this is great, we've got the plan in place, but we want you to quote on long-term disability for us, which we're easily able to do. Whether or not we can get the solution, it's a bit of a sale to the underwriters that we deal with because of the space, but we're painting the picture hopefully in a logical way that they'll be able to underwrite the risk. So the question is, when does it make sense? Unfortunately, I can't say, Simon, at 25 people go go another direction. That's really up to you to decide. And more importantly, it's up to the client to tell you.
Okay.
But really, we think it doesn't make sense at all. But I'm kidding. And Simon, by the way, thanks for coming from BC. You're up awfully early, so I appreciate you jumping on.
Yeah, I missed the one the other day because I set my clock an hour late to come on. And I was hoping to get a recording of it, but I haven't. Yeah, it was good.
Any other thoughts, ideas, questions?
Got a question in the chat box, Rob. Susan Healy, please review the pre-X clause for health and dental options.
Great. So the pre-X clause for health and dental options, and Rob, maybe you can pull that up. Yeah. The pre-existing condition clause, there you go, for health, for the health, because there are no medical questionnaires that we ask. There's no medical questionnaires at all. But if an employee or somebody is using a drug in the previous 12 months that is more than $1,500, or 6 months, pardon me, prior to the previous 6 months prior to becoming eligible on the plan, if it's more than $1,500, they would be limited to that $2,000. They would be limited to a $2,000 maximum per year. If they don't have any drugs that are exceeding that $1,500 annual amount, they're covered up to $1 million. So, as Rob said, if someone's taking an expensive drug, if someone's got MS or someone's got Parkinson's disease or whatever the circumstances are, and they're on a drug that's $40,000 or $50,000, yeah, they're going to be limited in to $2,000. It's as simple as that. We're just not going to take over the cost of that drug. If the house is on fire, you can't buy fire insurance. Simple as that.
And we can definitely help with government assistance programs like Trillium. We have some staff in our office that are highly trained and work with Trillium all the time, and we provide that kind of hand over the shoulder, and we really do help with that type of thing. So this protects the integrity of the plan for all parties involved, and then we can certainly help with the next steps on a Trillium or that type of thing as well.
So another way to look at it, Simon, that was a great question. And if all of a sudden they find out that somebody is taking a very expensive medication, yeah, you might want to look at a more traditional route where they don't have this pre-existing condition clause. That's something to certainly look at. There was another question that came up: is the $650 a week based on income, or is it guaranteed? It's a flat guaranteed amount for all members. What we have found is the average person in in Ontario anyway, in the building industry, in this type of market that we're going after, is making about $1,000 a week or $50,000 a year. So $650 is a flat amount. And again, it's, is it as good as LTD? No, not at all. Right. But it's guaranteed. It's out there. What the builder is fearful of, what the construction foreman is fearful of, is not so much somebody getting hurt, because that happens, right? But it's off the job site where someone gets hurt. They want to keep them on payroll. They want to keep them employed so they come back. There are so few people out there, so few skilled laborers out there. So, they want to, hey, if you've broken your arm, we want to keep you on payroll. We want to give you $650 a week so you can pay your rent, and you can pay your truck lease and what have you. So you come back to work when you're better. As opposed to, I got to lay you off, I can't keep you on payroll. This is a way to keep them on payroll. So the $650 a week is a great benefit, and it happens right away. Perfect.
There's a question. Any coverage for illness? It's just a purely accident benefit.
It's a purely accident benefit. There's no coverage for illness. And that's where, EI kicks in, if you would. And how long for LTD? There isn't an LTD benefit included in this. It's if you want LTD, it's certainly quoted on an individual basis, depending on their the risk profile of that particular company. So, for example, roofers, if the majority of them are roofers, we might be able to get staff LTD for office staff and managers and so on, and owners, but not necessarily the people that are up there banging the roofing shingles on.
And the accident income replacement indemnity is good for 52 weeks, 1 year.
Yeah, 52 weeks. Awesome. So listen, we're going to wrap things up because our time is up. Thank you all for participating. We greatly appreciate it. If there's any questions that you want your name on the PDF and your logo on the PDF, we're happy to do so. Just reach out to Rob, reach out to Carrie, reach out to Mike or myself. We'd be happy to do that. We want to thank you very much for your time. We're going to stick around for a few minutes. If anybody has any questions, or if anybody has any comments or would like to carry on a conversation. Just so you know, we are going to be participating in a very large trade show in Ontario at the end of November. They get about 6,000 people at this particular trade show. So people are going to know about this. People in this industry are going to know about this. We do not sell direct. We forward them on to clients that or advisors that support us, and certainly, geographically based as well. So Simon, if we find some clients, and there's some clients talk to us that are from BC, we're going to be sending them your way. It's obvious, as simple as that. But hey, we want to thank you very much for your time. Mike's going to send you a CE credit. We're also going to send you a note saying, please fill out the attached survey. It's just a few questions long. We want to see how we did today and how we can do it better tomorrow. If we're doing business together, thank you very much. If we're not doing business together, we'd love to. Check out our website, check out both websites in this case, the buildersbenefits.ca or buildersbenefits.ca and thebenefitstrust.com. We've got upcoming sessions over the next couple of weeks on various subjects. So we appreciate you guys jumping in, guys and girls jumping in, and we wish you success in the future. Thanks for your time. Have a great day. Bye for now.
Thanks, Robert.
Thank you.
Robert,
Yep.
it's Terry. I have a quick question.
Yep.
With the $650 package that we were talking about,
Yep.
that's the one that starts at 20 cents per hour, correct?
Correct. It
Okay,
includes $100,000 of AD&D as well.
Yes, yeah, that's the two options that are there.
Yeah.
Okay, awesome. Thank you, sir. I didn't receive the survey from the last session either.
Oh, you'll probably get it today. You were on Tuesday, right? You'll probably get it today.
Yeah.
It comes out
Yeah.
a day or two later.
Okay. Thanks, Robert. Have a
Thanks.
great weekend.
Thank you, Terry.
How are you, Carrie?
Pardon?
No, I'm talking to Carrie.
Oh,
Fantastic.
Not a girl.
Can't complain. Yeah.
Good. All right. Any other questions, thoughts, ideas? All right. Thanks, guys. Thanks for everybody. Carrie, Rob, I'll see you later.
Okay.
Cheers.
Thanks. Cheers. Bye.